Hello everyone, a bit of a different intro today. I am back in action after attending my 104-year-old grandmother's funeral. Certainly a time for celebration, not mourning, and to visit family. But I just wanted to say thanks for all the kind words and the appreciation that I feel from you guys. It is certainly very motivating. I'm looking forward to getting back in the video routine along with the Chart Guys routine of the live webcam, daily videos, and all that fun stuff. But I also want to take this time to share some thoughts, just being able to reflect over the past week, to remind ourselves each day not only to have appreciation for what we are doing, clicking buttons here and creating financial independence for ourselves, but just to make sure that our priorities are in line. These stocks are just numbers in cyberspace. Money is digital numbers on a screen or pieces of paper. And compared to family, life experiences, all the really important things in this life, it's important to not get caught up in this stock game. And it is a game. We are gambling. That's what we're doing here. It's a lot of fun, and it can certainly, lead to creation of wealth, which leads to experiences and helping family members. All of that is great, but it's important to have our priorities in line and to check ourselves very often while doing this to make sure that that is the case. And whether that means getting up from the computer screen and going for a hike in the woods or whatever it may be, just clearing our minds and making sure that we are separated, not getting too emotionally attached to what's going on here on this screen, and keeping our priorities in line, and family being far ahead of stock. So also wanted to extend a thought here of what to be doing here as we are creating financial independence for ourselves, and I highly suggest using it to create experiences, help family members, friends, whatever it may be, not to be purchasing material objects. You'll never see me buy a new car. It doesn't matter if I hit $1 million win here in one day. I will never buy a new car because it's a terrible investment, number one, but it's just a material object. It's not increasing any life value here. And, taking that money, going on a trip with your daughter, son, mother, parent, whatever, that is going to have a much longer lasting impact. And that same amount of money can be used in very significantly more beneficial ways. That's just my opinion. Now let's get into some stocks. We're looking at natural gas here on the daily and weekly time frame. So this is a perfect example of why the charts trump the fundamentals, in my opinion. And we have a reading on the inventory report for natural gas, where it's the first drawdown on the inventory in a summer month in something like 10 years, a decade. So you think that would make the price skyrocket. First time we have not added natural gas during a summer month, but that was not the case. We saw a 6-day huge dump in reaction to that news, so to speak. So that's just an example of where if you looked at the fundamentals for that week, you would say, wow, natural gas is going to spike. And it did see a spike, very short-lived, lower high continued to be set, and then the bears took over. So that's an indication of charts being a bit better, in my opinion, than the fundamentals, which would have had us look potentially bullish due to that last inventory report. So the bears have been in key control here, losing key support, setting lower highs and lower lows, and we now have a bullish reversal candlestick. We can see 2529, 2523 is where we saw the lows of the past 2 days. Did get some higher highs on Friday, but a bit of profit taking with that upper wick. So we're going to be looking at the little bounce attempt on some shorter term time frames for some more clarity. But the bulls want to see continuation tomorrow with a nice green day. All the moving average resistance here, the 10-day, 20-day, and 50-day are all up at around 270. So there is still potential for the bulls to see this oversold bounce continue, but we want to be aware of the potential of a bear flag, which we saw plenty of times, which I'll point out on the shorter term time frames. But we could even see another day or two of bullish activity before heading back down, indicating lower lows if it is indeed a bear flag. Weekly time frame, losing key support. So we had the 10-week and the 100-week holding as support. We tested it 5 weeks in a row, and now on high volume, we dumped through those levels. So they are back to resistance, and we set that lower low. So we're still maintaining the uptrend here on the weekly time frame that's been in play for the past 5+ months, but we have no moving average support until down at 243 on the weekly, and we'll be keeping an eye out for a potential bearish MACD cross. So it all depends on what your time frame is in terms of how you're looking to play this. If you're looking on the weekly time frame, you're looking for a bearish entry on any kind of bounce, and due to the oversold conditions on that 6-day dump, looking for this short-term oversold bounce to continue. So this is the 4-hour chart for natural gas, and these are plenty of examples of bear flags where we have a big dump some bounce, some oversold bounce cooling off the technicals, and then continuation to the downside. There's another bear flag. There's another bear flag. It happened multiple times last week. The difference now is, number one, the bullish MACD cross. That's a nice indication. The RSI is coming off of oversold, and we broke a lower high pattern. So we had a top out here at 2604, and on Friday we broke that, so a higher high has been set. The bulls are now looking for this to be a potential bull flag, or perhaps some normal healthy consolidation, maintaining a higher low. We'll be looking for 2582 to hold, the low of this red candlestick, to indicate the most strength. Establish that higher low, and then looking to break the high of Friday, 2626. Next resistance will be 265, which was the top of this little bounce attempt and the last little lower high. And if the bulls can break that level, that would be a nice indication for the bulls in the short term. We can see this 265 level acting as support multiple times back at the end of July, and now acting as resistance on that bounce attempt, and we might get another attempt of that level coming this week. So watching key levels here, we can see the hourly chart. You could have drawn all kinds of strength of this downtrend. You could hit the most recent drops or the longer term. Either way, we're breaking that to the upside and seeing the bulls finally show up after the RSI was very oversold on shorter term timeframes. So the question now is, how high can the bulls take this, and is it going to be a bear flag on the daily time frame? You better believe that the bears are going to be looking for re-entry after how easily we fell through all these supports. On any kind of little short-term bounce, we're going to see the bears sitting at 265, and then we'll certainly see them sitting at 270 as well. So the question will be, how much strength will the bulls show up with? And we'll certainly stay on top of it and check back in. Have a great rest of your weekend.